Hello and welcome back to a new episode. In this episode, we are going to be discussing about the 1D candle mathematics. I want you to know that trading the financial market is not a fun game. Okay? You actually need to sit down to study the mathematics of the candlesticks on the daily time frame before you can press the buy or sell button. And this is the very reason why 90% of traders in the market are losing their money every single day. I'm going to walk you through step by step, and I'm showing you an example of what I mean by 1D candle mathematics. The daily chart is the flagship of the market. Whatever price is doing on the daily time frame will surely or certainly affect all the time frames below it. And as an intraday trader, we want to take trades in the market every single day, make our profit or take our losses and get out of the market. Simple. And that is why you will need to understand what the daily chart is doing. When I'm talking about the daily chart, I'm not talking about marking out the structures on the daily time frame. I'm talking about analyzing each candlestick that is printed on the daily chart. For your information, if you may not have known, a single candlestick on the daily time frame represents 24 hours of price data, and that is huge. So if you can inculcate that into the lower time frame like the 15M or the 5M, you will be too sure that you can become consistently profitable in the market. Okay, so I'm going to tell you how we are going to do that, because every single time you find a daily candle printing, you will find out that the daily candle will be going up and down. Such it will be going up, it will be going down, it will be going up, it will be going down. All right, as it's going up and coming down, it's passing a message to the lower time frames. So the lower time frames will begin to react the way the daily candlestick is reacting. All right, so if you see the daily candlestick coming down and going up, coming down, it means that on the lower time frame, price is also coming down. So all this pullback on the lower time frame is trying to communicate to us that on the daily time frame, price is pushing down. Okay, so when it's pushing up again, you find out that this bullish candles that you're seeing here is trying to respond to what the daily candlestick is doing. If you don't understand this, guys, trading will become very difficult for you, and that is why you need to pay attention to this video till the end. Now, there are three types of markets. Number one is continuation trade. So you must identify, do you want to trade a continuation? The strategy that you will use in trading the continuation is different from the strategy you will use in trading any other type of market that you find. Number two type of market is retracement phase, the pullback phase. The strategy you apply to the pullback phase is certainly different from the strategy you will use for the continuation. And now you have reversal trade. So the strategy you use for any of the first two I mentioned to you will be quite different from the strategy you are going to use for a reversal trade. Now, I said in the previous video concerning daily candlesticks, I said you need to wait for two bullish candlesticks or two bearish candlesticks to be able to determine the third day's price direction. Okay, let's use this as an example. Look at this candlestick, this massive bullish candlestick. After it printed, look at the high and the low protected. These 2 days candle, price data, they are contained within the high and low of this bullish candlestick. All right, this is actually a pullback on the lower time frame, this is a massive move. If you go to something like the 15M or the 5M, this will be a massive move going down. And then traders who lack the knowledge will think that price on the 15M or the 5M is bearish, whereas it is not. It's just a pullback. Now, you do not need to do anything here. You wait until price closes above the high of this bullish candle, so you can be sure that price the following day will be going bullish. And as you can see, price closed above. After price has closed above, you now know that the following day you should position yourself to buy. Let's look at the date of this. This is on the 6th of August. You want to trade on the 7th, and on the 7th you want to take only buys. You do not want to sell the market. So what do? Now you can pick a fib tool. I use the fib tool. You mark it out from the high to the low of that candlestick on the 6th of August. Remember, we want to buy on the 7th of August, not sell. So once you have marked that out, now get to your 15M or your 5M. But I'm going to go to the 15M now. So we go to the 15M. Once you get to the 15M, what you want to do is to wait for price to open the following day, which is on the 7th. This is on the 6th. This is where price stopped on the 6th. This is where price stopped on the 6th of August. Okay? Very simple. Now, the whole of this, from this high to this low, is where you want to look for trade opportunity to enter the market within this zone. Now, in doing that, the first thing you will need to do, take a vertical line, mark where the 7th will end and where 8 will start. For example, if I use the vertical line here, I want to mark where the 7th will end, and then we can now know that that's where we want to trade within that day of the 7th. All right, now let's do that immediately so that the 7 continues. Okay, this is the 8th, so that's the 7th. That's where the 7th ends, that vertical line that you see. So now once you have done that, look at this. It is within this very zone, this zone, that we want to find trade. One more thing, if you are looking for trade, please ensure that you always look for trade around the 50% of this fib level. Sometimes it does happen in a buy condition. It does happen before it gets to the 50%. But the high probability scenario is if price can come to this 50%. From this 50% downward, you can take your trade going long. All right. Now, how do you approach the market like this? First of all, you need to read the structure on this leg that you are seeing. This one, let me show that to you. You need to read the structure of this leg. Read it out. Analyze the structure of the leg very well before you start anything, so you will be able to know what to do. So if we start looking at the structures of the market here, you can see, I'm talking about this leg. Now you can see we have this this consolidation here. Now once you find consolidation, I don't think it is time for you to start looking for any trade. So that's the consolidation there, and let me just quickly do that. That's the consolidation. Now after that consolidation, is there anywhere you can find inducement here? There is no inducement. Look at price printed this high and pull back, didn't take out any inducement. This high, pull back, didn't take out any inducement. Okay, this high, pull back, didn't take out any inducement, and so on and so forth. Look at it, no inducement was taken out. And therefore, because no inducement was taken out, we want to wait for inducement to be taken before we take any action. Remember, we are trading on the 7th. And now price has not opened yet on the 7th. So now we want to press forward price to open on the 7th. So price has started on the 7th. Now if price is coming down, we want it to come and take out this inducement here before we do anything. This is a valid inducement in the market. So we want price to come there to take it out. So let's see whether price will come and take it out. Unfortunately, price did not come to take it out and created a new high. So our inducement can be transferred from here to this zone here. So that's where our inducement is. We continue. Okay, some of you will consider this as inducement. I don't consider this as inducement. Why? I want to see a swing. A swing is a 3 candle formation. For example, let me show you what a swing is. Look at this. This high is higher than this previous candle's high, and it's higher than the next candle's high. Okay, this 3 candle formation is what produces a swing. Now we don't have a swing here. I do not like to mark this type as my inducement, so my inducement remains here. Okay, so we continue. Okay, so price has taken out that inducement right now. Where are our areas of interest? We need to start marking up our areas of interest. The first area of interest is this one. Remember, mark out the order flows first before the order block. This is not mitigated. That's the first one. Second one, let's look for the extreme. I've told you we are not interested in this consolidation. Okay, this is a traffic jam. We want to mark obvious areas of interest. Now, if we mark this, it's already mitigated by this pullback, so we cannot use that. Now, if we mark the next one, this one is unmitigated. Okay, so these are the 2 areas we have, this one and this one. But then I want to reveal a secret to you today for free. Okay, it's a mentorship secret, but let me reveal it to you today for free. Now, when you mark your areas of interest, there is a fair value gap that I called dragon fair value gap. Please take note of that. Dragon fair value gap. Now, once you mark your areas of interest, like the order flow or your order block, check below or above it. Is there any dragon fair value gap? Now, I'm going to explain to you what I mean by the dragon fair value gap. The dragon fair value gap is a gap that has been able to bury price in the most recent past up to 3 times. Once you find a fair value gap that has buried price for about 3 times in the most recent past, that becomes your dragon fair value gap, and that becomes a high probability zone for you to look at. Just forget about this, whether order flow, order block you have marked. Don't take my words for it. Just go back to your chart and do a back test of the dragon fair value gap, and then you will realize that it's a very strong entry zone. And now we mark this area of interest here. Is there any dragon fair value gap either above or below? Even this one, is there any dragon fair value gap above or below? There is no fair value gap here. Okay, now the one that is below this area of interest is this one here. Look at this, from this high to this candle low. Okay, now check, is there anything on the left here that it has? Is there any sign here that it buried price here in the most recent past? No. So this cannot be a strong fair value gap. Now, I wish I understood this fair value gap long ago. Okay, now in this case, this next area of interest, where is your dragon fair value gap? Is there any here? Check. Now let me show to you the dragon fair value gap here, so you can understand. Look at this fair value gap here. This candle's high not touching this candle's low. Can you see that? Leaving this gap. Now go backward. Look at first a tap here. Let's just drag it back and see what happened. Let's see what has happened in the past. Guys, see, look at what is happening in the past here. Look at what is happening in the past. One touch, look at it. One touch here. The second touch, third touch, fourth touch. Each time it touches, it pushes price down. Each time it touches, it pushes price down. Each time it touches, look at it. How many times? Fourth, fifth. Think about it. This is a strong zone, guys. This is a strong zone. So I will rather not take price in any of these, okay, but to wait for price to come to this very dragon fair value gap. Please try and understand. This is the dragon fair value gap. So we push it out. Okay? We push it out. Now, so now we have analyzed the market on the 15M now using the daily candlestick. Now, so let's begin to advance price and see what happens. Now, first of all, price has come into this one. So you can take your trade from here. You may decide to go direct. You may decide to go to the 1M. Now, but in this case, maybe we can look at the 1M here on this zone because price has tapped into the zone. So we go to the 1M now. So what you want to do is to wait for market structure shift or chalk. Let's mark our chalk here. First of all, this is our chalk. It's our actual chalk here. So if price takes it out, then we know what to do. So let's continue to advance price. Now this is the 1M. I don't want us to start. Let's get back to the 15M now that we have marked out the chalk. This is our chalk on the 1M. I'm doing this so that we can be a bit faster. So let's advance price and see what happens. So price took out our chalk here. Can you see that? So let's get back to that 1M because price has taken out that chalk. So where is it? This is where it took it out. But your chalk has to be a candle closure. Very important. It has to be a candle closure. So until price now closes above this very high, this candle's high, we cannot call it a chalk. That's not a confirmed chalk. Okay? So we will continue to play price. We go back to that 15M. Was it 15M we used or the 1H? Whichever. So we go back to that 15M and let's continue to advance price. So as you can see, price did not take out our chalk. Instead, it came down. So we go back to that 1M. So price just decided to come down and print a new low here. So with this new low, where is our chalk? Our chalk can now be transferred from here to this point. Where? To this point. That's where our chalk is. So let's continue. And now we have a new low in place and it didn't take out this chalk. So what do? We now have to transfer the chalk again to this point. Simple. Simple. And we continue. And chalk was not taken still, so we transfer it to this point. Can you see what I'm saying? Now let's get back to the 15M because something has tapped into this zone now. Look at this, our zone that we marked. Okay, look at the zone we mark here, this one. Okay, but this is our dragon fair value gap. We don't want to take trade from this place, even though price has tapped into it. For me personally, I don't want to take trade from here. Why? I have a dragon fair value gap that is below it. Dragon fair value gap is stronger than this. Okay? It's stronger than this. So I want to take out this one. I'm waiting for price to come and tap into this, my dragon fair value gap. Please go back to your chart and find out. All right? So we continue. Now, price has tapped into this. If you want to take your trade, you are free to do so. If you want to take your trade, it all depends on you. Let me bring back that. It all depends on you. If you want to take your trade from here, why not? You can take your trade. But for me, I'm waiting for this dragon fair value gap. Okay, so let's assume that you took your trade from here. Let's see what would have happened. So if you took your trade from here on the lower time frame, let's get back to that 1M. I hope you're following what I'm saying. Let's go back to the 1M. This is the way for you to trade, guys. This is the way for you to trade. This is a powerful way for you to trade. So this is the 1M. Price has come into this zone. So you want to wait for chalk. And your chalk is somewhere here. That's where your chalk is. So now chalk has been taken. So what you want to do, you want to wait to take price higher. And therefore, where can you use as your area of interest? Well, this is where you use from this very point where chalk took it out to this point. You don't need to wait for any inducement, but if there is inducement, there is no problems about that. Why do you not need to wait for inducement? Because price took out this swing that went up and came down, was taken out by a candle wick, not by a candle closure. That's why you don't need to wait for any inducement. But if it gives inducement, no problems. And as you can see, price is going higher. But where is our area of interest? This is your area of interest, not my own area of interest anyway. This is your area of interest. So if price comes back to tap into it, you want to go long from there. Okay, so let's get to the 1H to make it faster. So let's play price. Okay. Now remember, here is the 7. This is where the 7 ends. Anywhere from here is on the 8th, the following day. Once you cannot find any trade setup on that 7th, you don't need to force anything. Look at it. Let me show that to you. This is the 7th. And this is the 8th of April. So we did not find any setup on the 7th of April. So we now want to trade the 8th of April. But for you to do that, you will still maintain this structure as you are seeing. Just still maintain it because price is going higher. So on the 8th, let's get back to the daily time frame on the 8th and see what is happening. Now look at what is happening on the 8th, guys. Look at this. Just look at what happened. See, this candle that we marked before, that we analyzed on the lower time frame, look at the way price took it out. It took out with a candle wick. Can you see? It took it out with a candle wick. And once you find price taking out the eye of the previous candlestick with a candle wick, like I said to you in our previous video, I've discussed this on our previous video. This tells you that there's going to be either a pullback or a reversal. It's going to be either a pullback or a reversal. Understand? So this is going to be a pullback. So price will be going down. And if you want to trade this, like I told you, it's a different strategy altogether. It's a different strategy if you want to trade this. And I have done a video concerning that before. You can go to our playlist and check it out. Okay? Now, so we are not interested in taking trade to go short because we want to buy. Now, let's continue to advance price. Can you see what is happening there? Can you see it? Price is going down. Now, if you took this trade to go down, what structures are you going to maintain? You are going to maintain the structure of the 6th. This structure, this candle on the 6th, like we marked on the 15M. So let's get back to that 15M and you see what I mean. Maintain the structures of the 6th, because price did not close above that bullish candle on the 6th. So maintain that structure. Don't try to sell. Well, you can try to sell in a short term, for short term, but overall we are buying the market. Okay, so you will need to still maintain the structures of the 6th of August. So for me, I'm still maintaining my structure of the 6th of August, which is this. Because price pulled back, price did not take out this high, it merely pulled back. Okay, so you can trade the pullback like I said, but it will require you to use a different strategy altogether, and I don't want to go into that in this video. So this is my dragon fair value gap. I'm still waiting for price to come into it, even though it's not on the 7th again. This is on the, let's see, I think this is on the 9th. This is candlestick mathematics, guys. This is still on the 8th. Okay, this is candlestick mathematics. You need to understand it. Please, if you understand this, I can assure you that your trading will explode tremendously. Okay, so let's continue to advance price. Let's get to 1H and make it faster. We are looking at this dragon fair value gap. Okay, that's where we are looking at. So this is the 1H, and let's advance price to make it faster. Okay, price, boom. Can you see that? Straight to the dragon fair value gap. Straight to it. Look, for those who trade support and resistance, they will say this is support, support here, support here, support here, support here, and now turned resistance. Because this is a very strong zone, guys, I don't need to wait for any confirmation. But if you like, you can wait for confirmation. Let me get back to that 15M. I want to take my trade higher from there, because this is dragon fair value gap. This is a very strong zone. So let's continue to advance price and see. Can you see what price is doing? Let's frame it. We want to go long from here. Like I told you, when you are using the dragon fair value gap, you don't need to wait for further confirmation. Okay, all you need to do is to just enter the trade and set your TP. Give a buffer to your trade, and where is our TP? Let's look at this on the 15M, where we can target. Well, the first target will be this. Let me show it to you. Your first target will be this. That's going to be your first target. Now, second target, just a minute. Second target will be this. And then, okay, so this is going to be your third target, which is your ultimate target. But let me say something here now. You must know how to manage your trade. Very, very important. You need to understand how to manage your trade. Otherwise, price can take all the money you left on the table. So you need to manage your trade professionally. Just a minute. your first target should be this. Okay? And if you target that, you are going to make about 3.42 R. That's a good trade. Let's play that out first of all before we move to the second target. Okay, so let's see whether our target has been smashed. As you can see, first target has been achieved. All right, so we now that the first target has been achieved, we can move to the second target. Now in this case, I want to go to the 1H so that it can be faster. I don't want the video to be too long, so we can continue to advance price. Boom, can you see that? Second target achieved. Look at it, second target achieved. Now let me tell you something here, how to manage this short trade. Now after price took out, close above this first target, you move your stop loss to break even to be in a risk-free trade. And if you did that, this is what you will have. Just move it to this point. Simple. Move it to that point. Okay? Now immediately it closes above this second target. When it closes above, move your stop loss to lock in this profit here. So let's continue to advance price. I'm just telling you how to manage the trade. Now as you can see, it hit the third target. So look at what you would have made. Let's see. This is crazy. This is crazy. You would have made 72 R. This is crazy. Why? Because of this dragon fair value gap. See the sniper entry? See the sniper entry? And even if we came to the 1 hour time frame, this would have been our ultimate profit. Not even where we mark as ultimate. This would have been the ultimate profit. Okay? But price didn't get there. Let's see whether price got there. So price didn't get there. Let's see. Oh, boom. It got there. Can you see that? It's crazy, guys. Why? Simply because we understood the mathematics of the daily candlestick and we combine it with the dragon fair value gap. It's a game changer. I won't say more than that. But if you are new here, please consider subscribing and hit the bell icon so that anytime we upload a new video, you'll be notified about it. And if you want to join our free Telegram channel, please do so just immediately. It is completely free. Alright guys, thanks for watching. I see you in our next educational video.